I'm here with Principal and Founder of Bentham Asset Management, Richard Quin. Richard, thanks for participating in today's symposium.
Great. Thanks for having me, James.
Rates have repriced to far more normal levels, and they've done so pretty quickly. Do you feel the ecosystem, especially asset allocators, advisors and advised clients, has fully appreciated this or still playing catch-up?
I think they're still playing catch-up. When you've got a 4 to 5% increase in interest rates, it reprices everything. And I think there will be repricing lags, and I think there'll also be lags in the economy. Like monetary policy tightens, then every day that it stays above the neutral interest rate, it keeps on tightening the policy. So it will revalue lots of assets. Like, a lot of assets that don't reprice frequently, like property assets, the cap rates on those will need to expand. They need to be much higher than interest rates. That's where they traditionally sit. So I do think it'll take people a while to get used to it. So in actual fact, most investors don't need to take as much risk as they used to get the same return. So they used to say there was a Tina. The only Tina that makes sense to me is the Tina Turner musical. So,
given the speed of the reset, does the current environment have any obvious historical parallels, or do you think, in terms of market settings, or do you think we're really in uncharted territory?
Listen, it does have that Volcker-esque element to it, and Paul Volcker was, it's a bit of a hero of mine. He's the Clint Eastwood of central bankers, but I do think this one's different. It's so quick and so front-ended. And it's so coordinated by the whole world, I've got to think that it's going to have a bit more of an impact than people are thinking at this stage.
Bentham Asset Management is celebrating 20 years of its flagship strategy. Congratulations on that. But what do you think are the 3 key ingredients for such a record of longevity?
Listen, I think the key one is to have a good team and good culture. A good team and good culture will always be able to manage assets through different cycles. I think having a lot of flexibility in the mandate is really important. Like, we can invest in everything from government bonds to high yield bonds to senior secured loans to asset-backed securities, and we invest globally. So I think that having a broad universe of assets and not having too many constraints is a really important thing.
What's the most out there thing in your portfolio that probably 2 decades ago you never foresaw yourself investing in?
Oh my, the most out there thing. I think right now what we do is we do tail hedging in the portfolio. So we use 1 basis point of the yield of the fund to buy options every week. And we buy the cheapest option that will protect the portfolio. And it can be something different. It could be a semiconductor put on equities. So that sort of stuff it would have been considered very racy when it happened. Fortunately, when I set up the mandate, I wanted to be very flexible to get the best risk return for basically the retiree looking for income.
We have more and more of those retirees looking for income that are going to be coming into the market. Stability of income is obviously going to be more desirable. How do we as a market and managers like yourselves optimise that?
Yeah, listen, I think the layering of income is going to be interesting. Like, you can have different levels of risk and layering of income in your portfolio. And it's also got to be the reliability of delivering that income. We've spent a lot of time on that over the last 20 years doing that. And it's not as easy as it looks, especially if you're buying assets overseas and transmitting the income into Australian investors. But I do think it's one of those things that'll make a lot of sense to spend time on. And the risk of ruin doesn't have to be as large now because interest rates are much higher than the prospective inflation rate.
Richard, we're presenting the Income and Defensive Assets Symposium in both Sydney and Melbourne, 2 cities that share one of the world's great friendly rivalries. Which is your preference and why? I know you live in Sydney.
Yeah, I live in Sydney. I think Sydney's the natural beauty of Sydney. It's a supermodel city, right? It doesn't have to do much to dress itself up.
Try too hard.
No, it doesn't try too hard. But Melbourne, as Melbourneites would say, it's the capital of sport. But I also think Melbourne can be quite classy. So I think Sydney's a supermodel city, but Melbourne can be quite classy.
Thank you, Richard Quin. As a Melburnian, I'm very happy with that answer. Been a pleasure having you.
Cheers, James. Pleasure chatting.